Thank you so much, and good afternoon, everyone. I hope everything is going good, and a lot of learnings have been done in Quants League, and I would like to thank Quants League team to provide me third opportunity over here. Let's get started. Okay. I hope you guys are able to see my screen. Just confirm me on the chat. Maybe the host, can you confirm me if you guys are able to see my screen?
So yes, your screen is very much visible.
Awesome, that's great. So welcome all, and today's agenda is very simple. It's a Quants League, and we thought let's go for simple algo demo. Okay, so my
Santoshji, the screen
yeah,
is not visible.
screen is not visible. Let me quickly share my screen. Sorry about that. Yeah, hopefully now you would be able to see my screen.
Yes, sorry, sir. Now it's visible. Sorry for that.
No worries. Yeah, so being a quants league, I thought let's show you guys the end-to-end kind of algo trading. Okay, so here we're gonna make the strategies, we're gonna place the orders in the real accounts, and then we're gonna see how to exit. Okay, so most of time what happens if you go to any kind of algo things, they're gonna show you how to enter the trade. But unfortunately, they don't show you the real trades and to monitor the trade and come out of the trade. Okay, so that is what I thought. Let's show you guys really the real scenario. Okay. So the thing is that first of all, this is a regulated industry, so that's my disclosure disclaimer. And do remember that we do believe that every trade carries a risk. Okay, so in case something goes down, especially in case of algo fat fingering or something happens, okay, that will be too difficult. So just be cautious whenever you're making any algo trade. Do a lot of checks and balances before you go live. About me, so I'm a founder of Posse Technologies, as most of you guys be aware of it. So Posse Technologies is mostly into trading and the training, and then I'm a co-founder for Sonic Alpha, where we build strategies, we test the strategies, and yeah, and we provide subscriptions for our strategies. So today's agenda is two things. So one is in trading, algo trading demo, and then finally, if you guys have any questions, I would be really happy to answer those. Okay. This is maybe I may use some kind of jargons in between. So if I use API, API means application programming interface, as you guys must be aware of it. Then I may use IB, IP, MPP. So those are typical terms used in options trading. So here IC means iron condor. IB means butterfly, and we may use terms like break-evens. Okay, so upper break-evens or lower break-evens, or maybe upper protection and lower protections. So let's, the thing is that we're gonna make our Python things. Okay, so the things would be that we're gonna make a strategy. Okay, so first things, as you guys might be aware of, we have to import different libraries. We're gonna see what are the different libraries we're gonna use it. And then what happens once you start libraries are built, you need to fetch the CMDB, or I call it, okay, in terms of ITL, that's called CMDB, or maybe a master database where we're going to have every details for all the assets in NSE, okay, especially like what's Bank Nifty strike. There would be some unique code for every asset in the exchange, okay. So we need to download a master script from our broker, and then we have to find out, okay, today I want to trade a Bank Nifty, so and so expiry for and so date, and blah blah blah. Then it's going to give you some unique ID. So we're going to fetch that master script, and we're going to find out what's the maybe a current spot price, what is the possible the script ID. Okay. Then we're going to write the functions to retrieve. So this would be just I'm going to download the script, going to show you the script. Then we're going to have a function which going to fetch details from that script. Okay. That function we have to write, and then we're going to see how to access our account. Okay. And then we're going to build and kind of parameters, that these are the parameters we're going to build it. And then we're going to place the real orders. Okay, initially I may place the paper order just to show you the look and feel, and then we're going to see monitor the trade, and then there would be something like exit parameters. Okay, so we're going to see whether it exits from those. If triggers, then whether it's able to come out of the strategy, and then those things would be there. Okay, so let's move forward here. And in case in between, if you guys do have any questions, I'm happy. You can ping me in between because being a trainer, I do love interactive sessions rather than a one-way flow. Okay, so that's the plan details as of now. Okay, so let's move to the next slide. So here, what we're going to do, we're going to import a lot of libraries. So what happens? Python is famous because it has inbuilt a lot of libraries are there. So we have to use those ready-made functions rather than writing your own functions. For example, let's say I want to find out options Greek's value data vega theta. Okay, so one option is that you go and write your own custom a module or maybe a function to fetch those details, or maybe you can use some inbuilt libraries like Mabian is there one that can make your life much easier, and you can just use those Mabian library and you can find out what's data vega theta. Okay, so in fact initially when a few years earlier I was not aware of Mabian, so I did wrote my own kind of function to just calculate data vega theta. But later on, I came to know that maybe is already in use. Let's use that, and that makes life much easier. Okay. So what happens here? You have to identify what are the libraries required for your algo trading. For example, like first, and definitely you're going to have a API from your broker. So your brokers may give you some out of box. Those APIs would be there. Most of the time, those APIs are good enough to do few things. For example, like logging to your booking account, fetching the master database, and then placing the orders, order management, and then margin requirements and the reporting. Those kind of things are there. And sometimes what happens, those libraries may be kind of there will be some kind of restrictions would be there in that case, or maybe it may not be a full-fledged kind of libraries. In that case, you might have to write your own libraries. Okay. For example, like a few brokers, they may give you a really good REST API interface at their end. Unfortunately, their APIs may be in a kind of development phase. So they may not publish all the published proper APIs. So sometimes you have to write your own custom APIs. In fact, few brokers, we did find out that those libraries, what they have, those are not fulfilling our requirements. So then we built our own APIs and that gonna use REST connections and can download and then show the result the way we want. Okay. Then, if you're trading, say, something like indicators, cash base, okay, where you have indicators or oscillators, then you may use some libraries, for example, like TLE library, although we don't use as such. But if you want, you can go ahead and use a TLE library where it has a lot of inbuilt oscillators, indicators. So you don't have to write your own functions to find out the moving average, or maybe CCI, maybe a MACD, those kind of stuff. Okay. So out of the box, you're gonna get those. Okay. Then, as I told you, if you're trading the options specifically, then we do use a lot of like different libraries, especially maybe libraries. And then on the top of that, you have to do a lot of mathematical functions, date times here and there, analysis, those kind of stuff. In that case, you may require a Panda and the NumPy, and those would be widely used. Okay. Without that to be true, it's impossible for us to write a function and build a complete algo system. And then you have to definitely use OS libraries because you might have to come out of the system. You have to go into the folder, find out some files and those you want to utilize. Or maybe let's take the example like you want a time exit. So those kind of things can be done using the OS libraries. And then you might have to use some other utilities. For example, like if you write your own function to download some file from the internet, okay. For example, like some zip files are there, then you have to unzip it and extract and then do some functions. So in that case, you might have to use something like zip libraries, or if you want to download some files from the internet, then you have to use a request function. At the same time, if you want to play with the date and time function, then you might have to use date time, those kind of libraries. For example, here in our code, we're going to use most of what being shown over here. At the same time, I have added few more libraries that are required for us. I hope until now things are good and not so challenges. Okay. Let me move to the next slide. And next would be once you import libraries, the next function would be we have to write a function, okay, where it's going to download the master file. So what I, for example, let's say I want to trade today a bank nifty, say around 36,000 put, okay, and for this particular May 30, March 31st expiry. And in that case, we have to find out that what is in, because I cannot just go and place the order saying that, hey, go and place the order for Bank Nifty, this particular series, and this particular exchange, and blah, blah, blah. In that case, we need to have one unique ID for that. So it's much, much easier because every time you place the order, you cannot write so many things. So you have to just write a unique ID for that. In that case, we're going to use a function. Okay, so initially we're going to write a script which is going to download the master file. Okay, so that's called master file. And in that case, few brokers, they may provide a single master file for everything. And we have seen few brokers, they do provide two different files or maybe three different files. For example, like one would be for the FNO and one would be for the cash, or maybe a few brokers may provide you three or four. So one would be a simple FNO, one would be for the commodities, or one would be for a cash. Okay, so based on your broker, you have to identify what are those master files, and you need to download that. Okay, and these master files are updated every day. So I would recommend just go every morning and download, because what happens by the end of this expiry, the new series may get added on the seventh or eighth series. Okay, later on. So in that case, what happens? They have to update that at the same time. Tomorrow they have to remove the today's expiry. Okay, so it gets updated every now and then. So it's not. It's better to rely on the latest file rather than using the old files. Okay, and then once we get that master file maybe around, say, around 12 MB or maybe around 15, 20 MB is there. So every time downloading, it doesn't make sense. So we download once and then we do write a function so that it can go to that 12 MB or 15 MB master file and going to fetch a details for my script which I want to trade. Okay. We're going to use that function. We're going to see how to download those master file. We will see some example into that master file, and then we're going to write a function to fetch the asset ID that I want to trade. Okay. So I hope until now, good. Can I move forward, everyone? Okay. So let's move to the next one. And next, once we do get the asset that I want to trade, I would be happy to log into my account. So we're going to write see a sample that these are the typical codes where we have to write our username, password, or multi-factor details. And then once you log in, you're going to get something like session token or access token, those kind of things. We're going to see some terms. It may look jargons in case if you're new to the algo trading, but just bear with me. I'm going to just give you the examples here. Okay, so it would be like once you log in, you have to share your details to the broker. Okay, for example, like what's your consumer key, what's your user ID, okay, what's your access token, what's your password, and because of regulations, you do have to send a multi-factor authentication code. It could be a OTP or something else. And in response, if everything goes well, you're gonna get something like session token. Okay, so this is the one that we're gonna use. Okay, so for later on, if you want to place the orders, okay, so again, you don't have to log in every time. You just got this session token. You have to store this session token, and then every time you have to place new order or new functions, you have to use this session token along with your consumer key, those kind of stuff. So in that case, system is able to identify, and it won't ask you authentication again and again. So we're going to see how to log into our broking account and get the session token. Next would be once we are able to log in, we have to plan a trade. Okay, so that's our trade plan. So here we're going to identify that, hey, I want to trade into Bank Nifty or maybe Nifty. Then what would be possible strikes? Okay, so these strikes could be like in the earlier Quants League last year around the same time. Okay, we did that hard coded. There was a space between the for the iron condor, but this time we're gonna use a futures data, and we're gonna say hey, that maybe a sell OTM's call OTM course which are 0.5% away from the current spot price. So you have to write some formulas or some kind of a method which gonna identify your strike details. For example, a lot of time if you're trading the iron condor, I have seen that a lot of guys would rely on the data values. So they're going to identify the data strikes, which are data like, say, example, data 30 or data 25. So they would be happy to sell something which is delta 20 or 25, and I'm going to buy insurance maybe a delta 10 or 15. So you have to write your own function that's going to decide that what will be the proper strikes. For example, in case you're trading, for example, iron butterfly, iron fly, then ATM would be the best easiest thing. Okay. Then once your strategy is identified, you have to place the orders, and then you have to identify what would be your profit booking rules. We have to define that this is my stop loss rules, this is my profit booking rules. So that again you have to code it. For example, that I have received 100 credit. In that case, if I want to, if my trade goes against me, it means if my trade goes from the 100 credit, it goes all the way to 125, it means I'm in the loss. Okay, of around 25%. In that case, we will write a rule that let's come out of this trade. I'm happy to come out of this trade. Okay. At the same time, there should be a profit booking rule. For example, I have received the 100 credit, and whenever MTM comes down and it is a 25, 75% is received actually in terms of MTM, then I would be happy to book a trade. So you again, here you have to write exact numbers that this is my triggered point for the stop losses and this is my triggered point for booking a profit. And a lot of guys may write based on, we normally prefer to write based on the percentage of the credit received. And you may write a few more things. For example, here you may say, apart from this, I want to come out of the trade based on the time exit. Okay, for example, if I'm doing the intraday trade, I can say that at around 3 o'clock or maybe 3:10 or maybe 3:15, I want to come out of this trade. So that could be another your exit criteria. Okay, so can we move forward? Yeah, so that's our trade plan. Okay, let's quickly move to the next one. Then we're gonna place the order. So once we identify the trade, I'm gonna place the order. Okay, so we do have to write the function that yeah, this particular strategy has two positions are there. This particular strategy has the four positions, and sometimes like in my live trading session, we do use a complex strategy with a six leg positions. We have to write the this particular strategy do has a six legs are there. Okay, so we have to place the orders, and then we have to get the confirmation from our broker saying that yes, orders were successfully placed. Okay, and then so once we are into the trade, we have to monitor the trade. So we have to monitor that. Then again, you can define the frequency for monitoring. Maybe a real time every second, maybe every minute, maybe every 10 minutes, whatever frequency you love. Being a like kind of algo trading, we would prefer to monitor real time, but just to show you the examples here, it will pump a lot of data here. So I'm going to pause every 5 seconds. Okay, so it's going to frequency will be every 5 seconds. We're going to see the data. Otherwise, I won't be able to explain you what is the MTM. Okay, so we have to define that particular monitor frequency, that monitor every second, monitor tick by tick, or monitor every minute. Okay, and then we're going to have exit rules. So we're going to have exit rules based in terms of a stop loss, in terms of a target, and at the same time, in terms of time exits. Okay. And let's quickly go to our code. Okay. So I hope, are there any further questions, guys, here before we jump into the code? If there are some questions, do let me know. Otherwise, I'm going to go through the. Okay. So there are no further questions. Let me go through the our code, and here we're going to use Kotak API. Okay, so in case if you want to download the Kotak API, that's the website over here. So you can just look for this one that says uh, KS API client. Okay, so that's a Kotak API that's there that can be used. Although in our live setup, we are using a mix of that. Okay, so we do have our own custom API, and plus we do use a mix of these two. Okay, so here as you can see, Kotak guys, they had a bit algo that can be used to log in to generate your session token using two multi-factor. Then there's a function for place orders, modify orders, cancel order reports. Okay, those things are there. So most widely for us would be definitely this to initialize. Then we're going to use a login, and we're going to have a session tokens and then place order. So at the moment today, I'm going to show you this four. Plus maybe we can use order reports and then trade reports. Okay, and in fact we're going to see our positions also. So we're going to use this typical kind of modules over here. At the same time, I'm going to use this also. Okay, code just to get the price details. Let's go to our code over here. So that's code over here. Let me restart the kernel over here, so that everything is clean. Okay. let it start because I was trying because I don't want to show you some kind of wrong demo. So initially in the morning I was trying that everything runs smoothly. Okay. Let's start here, guys. It may, believe me, it may look jargons if you're new to the algo trading world, especially in terms of Python. Okay. So let's start a code. It's not a very lengthy code here, but yeah, it's going to take some time and you will have to digest that. The first thing, based on your broker, you have to write something codes to import. Okay, some code you have to write to import your broker's API. For example, here we did wrote a code here that we're going to use a KS, that is Kotak Securities client API. So this is a code that will give me access to this typical modules over here. Okay, so if I want to use margin, I want to use code, and out of the box, I have to use this function. So I'm going to use a Kotak API as a function. Okay. These are the typical your systems and the other utilities. For example, here, as I told you, Panda is used for a lot of mathematical calculations. Okay. A request I'm going to use because I need to go and download your R master files. Okay. So master script, or maybe if you want to write your own REST-based functions. Okay. Then you have to use this. Then I'm going to use some date and time function because I have to find out what is the current expiry. Okay. And then for that particular function, I have to use this one. And then we're going to write a time delta because sometime with the current date, add maybe another 10 seconds and add another 5 seconds or 20 seconds or some time frequency. Okay. For that, I'm going to use a date time function. Okay. A time data function. And then we're going to use a time function to pause my system because I'm going to show you every 5 seconds the updates. Okay. And then NumPy systems and the JSON. Although today I'm not going to use any JSON function over here, but in fact, I'm going to use it because I have stored my username, password in a JSON file. Otherwise, what happens if you're using the REST API function, then you have to use a JSON because whatever results comes from your broker, most of the time it will be in the JSON format. And then if you guys are interested to go ahead and do calculate your own data, vega, theta, gamma, those kind of stuff, then you have to use the mapping function. Okay. Although today I'm not going to use, but we do use widely this function. Okay. And then today, because I'm going to log into my account, I'm going to download the session token. Okay. And session token is very critical things. So what I'm going to do, I'm going to hash. Hash means I'm going to encrypt and show on the screen so that you guys can see something on the screen, but that won't be the real session token because using this session token and by mistake, if I show the code and it does shows my username, I don't want you guys to go or maybe my consuming key. I don't want you guys to just blindly go and log in and use my session token to do trading in my account. So that's the reason what I've done here. That is gonna show the session token, but that will be encrypted. That will be a junk kind of thing. Okay. I hope, guys, until the first part is that importing necessary libraries. I hope there are no queries or questions on that. If it is there, do let me know. Okay, nothing. Okay, let's go to the next one. Okay. Next function says, hey, we need to go and we need to download the master file. Okay, this is typically, and if you have used your old days, okay, especially earlier when I used to log into my broking account, especially with the Trade Tiger, okay. Yeah, the moment every time you start the Trade Tiger, Sheikh Khan's Trade Tiger, okay, it used to download a lot of big files at the background. That was nothing but that was a script files, okay, or master database file. Same way, but nowadays what happens, a lot of time we are using a browser base, so it doesn't actually need to download this file. But if you have some kind of a client based like an SA application, those kind of things, so as soon as you start that application, it's going to download the latest database file. Okay, so this is a function where we have defined that, hey, go to this particular URL and add this kind of a date and time parameters. Okay, then it's going to download a file. Okay, and once it downloads the files, it's going to store on my system. Okay, so if you go at my system, it's not going to, I mean, it's not showing here any files. Let me go and download that file. Okay, for you guys, what I'm going to say, go and download a file and store that file as an instrument underscore token dot txt. Let me see if that is there by any chance. As you can see, that's a file that was downloaded 44 minutes earlier. Okay, and we're going to download this file. Okay, but let me quickly show you the content of this file so that you will have some idea. Okay, so let's see the content of this file before we go and download. So this particular file is, as I told you, it's a master kind of a database file. But this particular file is for the FNO. So here you're going to see that there is some unique token, okay, unique number, and then it shows you that a symbol name, and then it's going to show you what's the last traded price, what's the expiry, and lot size, and then a segment, whether it's MCX or whether it's NSC, FNO, okay. And this is going to show you other like X-axis means it's a future, and it may show you a CE, C means call, and PE means it's a output information. Okay, so let's go and close this particular file and download using our function. Okay, so let's write this download. Just see here, guys. This is showing me that it was downloaded around an hour before, around 45 minutes out before that. Okay, so let me run this particular function. So it's going to say go to this particular URL and download the file. So I'm going to run this particular function. Let me start one by one. So let me start first, input the libraries. So that's successfully done over here. As you can see, it's showing the asterisk. It means it's running this particular function, and this is successfully done. Now I'm going to do the part two, and I'm going to press Shift Enter, maybe Control Enter in the Jupyter notebook, and it's going to run that function. So it's running this particular function, as you can see, and it has downloaded this particular file. So this is the URL that's being provided by Kotak Securities, and it goes from this particular URL and has downloaded a file, and you can see a sample details over here. So it says it has downloaded a file, and these are the typical columns in that file. If you open that file in your Excel or in some other spreadsheet, is going to show you that it does have something known as a instrument token. So this is what it's required. Okay, so we need to identify what is bank nifty's particular strike, a particular expiry, whether call and follow put or maybe future. What is a particular instrument token? Okay, because every time I cannot write all these details. Okay, and that hey, go and download a bank, go and trade a bank nifty with this particular strike, with the call and put, and in that case you might do a lot of mistakes. It's better to identify the token and just write that go and buy this token or sell this token. Okay, so that's much easier. So it has downloaded this file, and let's see whether it's showing us the latest date, latest time. It's showing me that an hour before, and this file is of around 8 MB, and this is only for the F1. So you need to download, if you're trading with the cache base, you have to download the cache URL. Okay, so here we have downloaded FNO only, not the cache. In case of the cache, there would be some other URL like CSH or cache would be there, and that your or maybe EQ would be there, and you need to go and download that file, and it's going to show you the similar instrument tokens, but for the cache instruments. Okay. Once this file is downloaded, let's quickly see if I want to identify that what is a bank nifty or maybe a nifty ATM price, or maybe say some particular strike, and for the current expiry, what is the token ID? Okay, so we have to write a function because we cannot go blindly and search in this particular file. Okay, it's easy to write. I mean, it's better to write a function. So this is a function which this is a custom function that we have defined here. So it goes, it says get the instrument token from the F1 file. So for that, we do need a few things. For example, we do need that what is a instrument name, that is what written here. Then we have to identify what's the instrument token, whether it's a FNO or I mean futures or the call or put. Okay, for the future, we do have to write XX, and for call input, we have to write a CP respectively. Okay. Then we have to define what is expiry. As you can see that the expiry functions are over here. So we have to write a date and time in this particular format only. And then this is for the future. So we can say strike is none, or maybe we have to define some strike and for the option. So this is a particular function that is written there to identify what is my instrument token for a particular strike and the instrument and the series. Okay. So let me run this function here, guys. And this is a very simple function. If you think there are any doubts, you can ask me over here. So we did say that what is the name, what is the expiry, and what is the date, and then it's gonna fetch the details and send me the result over here. Okay, let me quickly write here. And this is just we are defining. We're not going to use it. We're going to use at the later stage. So I'm just going to press Shift Enter, run this function. So this function, there is no outcome for this function, but this is just to define a particular function over here. It comes, we have to connect to our broking account. Okay, so and so for the booking account, you do have to write that what is your access token. So once you connect with your broker and the broker allows you to trade using the API, they're going to give you a few things. For example, they're going to give you a consumer key, that is your consumer key. That's your access token. And then definitely you're going to have your username, your password. They may give you some particular application ID or something like that. So you have to use these 4 or 5 different parameters. On the top of that, you may have kind of a double factor authentication parameters. Okay. So for the Kotak API, we're going to use all these particular functions over here. And those results I have stored in this particular file. So if you go to my folder over here, you can see that there's a file called config.json. Okay, so in this particular file, I did store my name, I did store my access token, consumer key, application ID, at the same time host ID, and blah blah details. Just to give you an idea, I'm going to show you the sample code, not the real code. Okay, so you can see here that config sample.json. Let's see the exactly what is being stored over here. Okay, so let me see here. So this will be typical format, okay, because you don't want to show the real thing. So I mean, I don't want to show the real thing, but this will be typical format. So we're going to write kind of a JSON details. So we're going to say that this is my access token that you will get it from your broker. Then you have to write your user ID, your normal trading ID. Then brokers would give you a consumer key. That is what you have to write it here. So this is IP. That's again a string you have to define here. Then application ID, the way you configure your API, and then what will be your password. You have to write that password, and then brokers may give you some host. Okay, because this for example, like the brokers may have at the back end, they may have 3 or 4 different API servers would be there just to load by another thing. So they may provide access in one of the API servers, so not all the API servers. You have to write what is your host, where you're gonna send your orders, and the broker will accept that. And then maybe if there's a multi-factor, those things would be there. And this is not required. This is what you're going to get at the end. Okay, so you can ignore this particular function. So you have to delete this. This is not required. Okay, this is what being there in my real file over here. Okay, and then once you write, then you have to write here, go and connect to my broker and get the session ID. So this is the function where we have sent our access token. We need to send our user ID, consumer key, IP, application details, and the host. Okay. This is a function. Then as a once you connect, it's gonna ask you what's your username, password. You have to write that, and in return, you're gonna get a session token. So just remember, this is what is required. So after the handshake, okay, once we connect to the broker, it's a hi, hello, how are you things. It's going to give you one token. That token is what here, session token. So using this token, or maybe you may call it that this is your badge. Okay, like if you go to the office, you're going to have your ID. Okay, you get this ID. So every time again you go to your security guard won't ask you what's your name, what's your department, where do you sit, when you join. Okay, so initially once you do the handshake with your company, it's going to give you the ID. And every time, next time you want to go to the facility, you can use that ID. So same thing is like here, a session token. Okay. So we're going to get the session token. And here what I have done, I've written a function that will encrypt my session token with some different parameters, chunk parameters, and it's going to show me what's my token over here. Okay. So let me run this function, and let's say normally your function, once you get the response, it will be something like this kind of chunks would be there. Okay, so let me run this one, and let's see what the result. Okay, so run this function here, and now it's able to connect, and it's showing me that, hey Santosh, this is your session token. Remember here I told you that I have done some encoding, so that is not going to show me the real session token. But so if you're doing the coding with the Kotak, you have to just put a hash mark here. This line is not required. This is good enough. Okay, so it's gonna get you a token. Okay, this is just to show you that once you get a token, it would look like this here. Okay, so now next time I want to do the transition, I want to send the order, see the report, everything. I have to use this session token along with my consumer key. That is good enough. Okay. Now let's see what are the typical stocks I have in my portfolio. So we have now connected with my broker. Now before trade, you might have to see what is your capital in your trading account, or maybe what are your portfolio. So this is just a kind of example I've written here. It's not hard and fast that you have to do this function, but let's see the example here. Okay, so I say client position stocks. Okay, that you can see that there was a position function was here. That's going to show you what are your open positions. Okay, so I'm going to use the same thing here. I'm going to say, show me the stocks. Stocks means what is in my portfolio. Okay, so I don't have a very huge portfolio, but let's quickly check the result here. And this bugger is showing me that, hey, Santosh, you do have so many things in your account, and it's going to show you everything in the JSON format. Okay, so it's going to show, for example, I do a lot of Bs in multiple accounts. Okay, so showing that you do have a Nifty Bs in your portfolio. Okay, now let's talk about a margin. Before we trade, it's better to have that. You should have an idea of your margin. So I'm going to write this particular function, and it's going to show me that as of now, how much margin is left over. Okay, it's going to show me that yes, you have a margin of so and so amount, and it's going to show you the details. So it's going to show you that how much margin is there for your cash trading, how much margin is there your futures trading, and blah blah blah. So it's going to show me some margin requirements, margin details over here. That because if you want to do a trading, sometimes you have to calculate position sizing. So you should be aware of your total capital that's available for the trading. Okay. So guys, until now, I think that's a simple what we have done. So until now, we have imported the libraries. We did the handshake, okay, with the brokers. We did downloaded the master file. Okay, so next thing would be we have to write a function. We already wrote the function. We're going to see the example of instrument tokens. Okay, so here is a function. So as we have written our own function, instrument token df. Okay, that is being written over there, the top. You can see here. So we're going to utilize this particular function now. Okay, and get instrument token. And we're going to see the example here. Okay. So what I'm going to say here, getting a simple monthly and the weekly expiry. Now, before we trade, for example, I would prefer that what is my expiry. One is you can hard code it, like in my last year's Quants League, where I've shown you in PyCharm. Okay, there we have hard coded that is this is the particular expiry. But here we are in this particular latest thing. I'm going to show you that how does it download the. It knows out of the box that this is my the first weekly series and this is my first monthly series. Okay, so if you want to trade the weekly series, you can write just function that and go and use the weekly series. And if you want to trade the monthly series, monthly series. This is a smart way where we're going to downform the instrument token because we know that monthly series are only for the futures, okay, and the weekly series are there for indices, especially bank nifty and nifty. Okay, so we're going to say download the option first option series. So it means I'm going to get a weekly expiry, and if I say go and find out the instrument token which is a futures token for the nifty, then in that case I'm going to get a monthly series. So let me go and down write see the outcome of this particular function. It's going to show me that hey, today surprisingly we have both a weekly and the monthly series today. That is the 31st March 22. Had it been some other day, I mean, let's say tomorrow, if I do I run this particular function, it's going to show me that April 1st week is your first weekly series, and the 20th of the April would be your monthly series. Okay, so it's able to identify that this is your current weekly series and this is your monthly series. Now here we're going to use our function. So we do have written a function that is a get a instrument token FNO. So let's say I want to identify that what is my uh, Nifty say 1700. Let me quickly check whether Nifty we're going to change that. So as of now, I can see that Nifty is somewhere 17,500. So let me write the function here that get me the token ID for 17,500. Okay. So I'm going to change this number to 17,500. So what I'm writing here that give me the unique ID for Nifty for the strike 17,500 and for the put. Okay, so what is the exactly instrument token ID or maybe the batch, the ID I told you. So that is going to give the batch ID. Okay. Same way, this particular function going to give me a futures. Okay. Let me run, and as an outcome, is going to show me that what is of my futures instrument token for the Nifty, and what is my options 17,500 for the weekly series. For the put, what is the instrument token? Okay, so let me run that function here, and as an outcome of this function, you can see that it's showing me that Nifty is futures segment. The instrument token is what 18329. That is a unique ID. That's a batch ID. Okay, let's quickly see what is the options. So that was the options, and this is the future. Okay, and that's my futures token. Okay, so it's going to show me that this one is for the in fact, yeah, this is for the future, and you can see the option type is showing me put. So this is for the option. So for the option 18,329 would be the unique ID. So if I want to place the order for the put of 17,500 for the 31st of the March race, I have to use this token number. And in case I want to place order for the futures, then have to use a 47828 as a token ID for today. Okay. I hope until now, guys, everything good. Okay, no comments. That's happy. That's I'm really good. Okay. Next comes let's find out that for 1829, that is for the put, what is the price, or maybe what is the futures price as of now. So run this command, and as an example, it's going to just give me the output that what is the price of that put 70,500 as of now, and then what is the price for the future. So here I'm going to use a client code. Okay, so that is what you have seen in the API. So I'm going to use this client code. Okay, let's see the outcome of that. So let me run that, and you can see that it's showing me that the outcome of the first one is 17,504. Okay, so that is my futures price, and this guy is showing me that this is your options price. Okay, so we need to write typical this function client code instrument token, and here we have defined our token ID. Okay, so and then it's gonna find out the LTP price of that. Okay, so it's gonna give me that this is your LTP price. In case instead of LTP, if you want to note down what is the bid and ask, you can write those functions here. So you can say instead of LTP, I need a bid price or I need a ask price. So that can be customized. Okay. So here now we know that I want to trade a Nifty, and I know that this is Nifty's futures price as of now. And as an example, I've shown you that this is your put price here. Okay. Now here we're going to define our strategy. So as of now, we were just kind of doing the handshake with the brokers, and we are saying we are trying that are we able to communicate with the brokers? Okay. Are we able to get the price for the from the brokers? Are we able to get the right expiries and those kind of initial handshake? Now here we have to define our algo parameter. Okay, you can write. So this is where you have to do a lot of brainstorming session, and you have to define your strategy. So here I'm going to show you a very simple example. The strategy that you might have seen in my most of the money control articles. Okay, so if you go to money control articles, you're going to see that most of the time I preferred a money iron counter strategy because that's one of the very safe and the risk defined strategy. Okay, so I don't want to give any strategy where a lot of my audiences may go in a big loss. Okay, in case market if there are some kind of back swan kind of event. Okay, so that's the reason we prefer to give the strategy which are much a safer strategy. And this is a iron counter strategy which is most widely used by a lot of option traders across the globe. Let's see what are our parameters here. Okay, so here we are going to define that. Hey, find in the iron counter strategy these two legs we have to define, then these two legs we have to define. So what we are saying that get the future price, and from the future price go 0.5% away and sell the call, and then go 0.5% backward and sell a put. So you may define your 0.5% up, you may define using some hard coded points. For example, if I'm only trading the Nifty, I can say always go and from the spot price go 200 points away and sell, and go 200 points backward and sell. Or maybe I can define that find out the call which is a delta of maybe a point say 25, and the put data which is a 0.25 when sell both. So this is something you have to write here. So just to give you a easy example, we have just written a futures. We're going to take a futures reference, and we're going to add a price here. Instead of writing a future, I might have gone for the spot, but in that case, I have to download two master files just to save our time. Okay, we just thought let's take the future as a reference and add a 0.5% here and add a 0.5% forward. So that is the first thing we have defined. Then we have to buy the insurance. So this insurance could be maybe a 1% away, maybe 2% here. Just to give you the example, we just blindly we're going to take a 3% away. I'm going to buy a long call, and 3% backward. I'm going to buy for long put. Okay, so that these are the custom parameters. You can go, you can define your own parameters, or you can say I need to buy a call which is if this was a 300 points, this should be a 400 points or 500 points away. Same way, or you can say if this is a delta of 0.25, then there should be a delta of say 15 or 10, and this could be a delta of 15 and 10. So this is a way we are trying to define our iron con. The same way, if you're trading maybe a calendar spreads, maybe a iron fly, or maybe some other strategies, you have to define your parameters. This is just example for the IC. Okay. Next is if I take this particular trade, what would be my stop loss? So we are saying that hey, taken this trade and this would be my maximum profit potential here. Okay. And if price goes against me, so against me means say I've received the credit of 100 and suddenly market volatility is increasing or maybe data is going against me. And if I'm in loss of around 25% of my credit, okay, total credit. So if my credit was 100 and now the total credit is 125, which means I'm in loss of around 25 percentage. Then I need to get out of this trade. So here we have defined that my stop loss is 25.25% away from the credit. So there's a maximum profit potential if trade goes against me. So at around 25% of a credit receive, I'm going to get out of this particular trade. And at the same time, we have to define what is our profit potential. So this is our custom parameter you can define here, whatever you wish. We just thought, let's make it a simple one trade. Okay, so we said if this is 100 points and if my trade goes in my favor and whenever we get a 25 I mean, 75% of credit received in our pocket, we're going to come out of this trade. I don't want to get a complete 100%. Okay. So that you can define over here. So these are just custom parameter, custom value. You can go, you can change based on your trade plan. Okay. And then you can write that if trade, I'm in the trade and timing is 310 or 35, whatever, I want to get out of this trade. So again, this will be your third parameter for the exit. Okay. So one will be what is profit booking, what is the loss booking, and what is the time exit. And then we can define that every 10 seconds, 5 seconds. So I thought let's make it 10 seconds or 5 seconds. That's much easier. Although in the real market, we may go for a tick by a tick kind of monitoring. Okay, but in that case, the data will be too huge, and you guys won't. I won't be able to show you so much details, data, and to show you the exact results. Okay, so we're gonna pause for every 5 seconds, and we're gonna see the results. Okay, so this is our typical iron contour that has been defined. Now here comes, then we have to do a kind of, we have to store our logs, order details also. So that is what being defined here that, okay. So let's see here guys. So here what we are saying that my security name is Nifty and I'm saying that I want to trade only 100 strikes. So in case you want to trade a 50 strike, you just go and define the word here, number here 50. But normally I prefer to trade all the 100 strikes. So in case of Nifty, I avoid 50 strikes. Okay. And then we did said that as my trade so these are the short triangle parameters. We said the half a percent away and half a percent here. So we have to write half a percent. So in the simple mathematical format, we did says from the future price add a half 5% and go and sell a put and sell a call from this side and that side. Okay. Same way for the profit booking for the insurance, we did set that 3% away. So we're going to say 1.03. Okay, so this is the way we have defined the case. Okay, that is, this is you have to buy and this is what you have to get the insurance and short the principal leg. Okay, and then we have to define a profit booking rules. So we did define that my profit booking rule is 1.25. That is stop loss. That means if trade goes against me and total spread which was 100 points, if it goes 125 points, then get out of this trade. And same way, my iron condor target, that will be a 0.25%. It means I have received a credit of 100 and now the total credit, if I take a trade as of now, is going to give me only 25% of the initial. It means we are in a profit of around 75%, get out of this trade. And then we have to define what is the lot size. Okay, so this is the 50 because we have to define, calculate the exact lot number of lots or positions we have to trade. Okay, then here just to make the things much easier, we said this is a start time. So you may go and define your own time that you want to take your first trade at 9:20, 9:25, 9:30, whatever. So you can define your start time, okay, when you want to take the trade and the last trade to be taken. So you can say define that my last trade should be at maybe 3 o'clock or maybe say 3 o'clock or something like that. Let's say 3:20. And time limit, I'm going to say maybe let's say get around 15:05 get out of this or something. Okay, so you can define some parameter that this is your market opening time, market closing time, and forcefully when you want to get out of your trade. Okay, that those things can be defined, or maybe I can define here that make it about 9:20 and 9:20. Okay, Just to make things simpler, I'm going to make it 1519. Okay. Next, we have defined that where I need to store my trade info. So here we have defined that I'm going to make uh, array where I'm going to store all the information for my trade. So this is a typical command here. So we are going to say, so we're going to run this function and we're going to say this function is true until between the start time and the end time. So we have defined here that I want to trade only when my time is more than this and less than this. Then only go and run this function after market hours or whatever defined time I have defined. Don't trade, okay? And don't trade before or don't trade after my what the parameter that is defined here. So remember here, guys, here this is 9 comma 20. It means 9:20 until 3:20. I want to be in the market. I don't want to be in the first 5 minutes or in the last 10 minutes. Okay. Then we said, what do you want to trade? So we're going to say initially that there is no trades are there. So we're going to say, hey, initially assume that if my trade is false, it means there is no trade. Assume that every time if I run the function, you should not go and take a new trade. So we have defined that if only trade initiation is false, then assume that you don't have any trade and take a trade. And this is the parameter we have defined. So first, as I told you, we have to identify what is my future price. Because from half a percent away and half a percent there, we have to by the short the calls and short the puts. So first we have to get the futures price. So this is the function which we are going to say get the futures contract. So we have written we're going to use the same function which was defined at the top, and we're going to say that I need a futures price. And then once we get the futures price, we're going to store it here that this is my futures price. Then we have to identify what is my ATM strike, because future could be, for example, here we did got that my future price as of now was 70,504, but I cannot go and trade a strike 17,504. We have to get the nearest 100 strike. So we have to divide this by 100 and multiply by 100. Okay, and take the divide by 100 and get the only module and multiply by 100 so that you get 17,500. That is exactly what we have written here. We did say what is the nearest ATM strike. So we said get the future price, define the strike price, and multiply by the strike difference. So this is gonna give me exactly and give me the integer value of that, not the decimal value. In that case, we're gonna get the result as 17,500 for the above example. Okay. So from the futures price, we have to get the nearest 100 strike. Okay. So that's the reason we have written this particular function. So it's going to get us 70,500. So now it knows that for this particular thing, this is the current ATM strike. And then we have to go half a percent here and half a percent there. So for that, we did write a function here that then what will be my short call strike. So we said go half a percent away. Okay. And then we did got my short call strike. So from here, we just added a half a percent. We got this. Now we're going to say from here to here, what is the distance? Okay. We need to identify the distance of this, and then we're going to subtract over here, and we automatically we're going to get a short put price. Okay, strike. So this is the function what we have written here. Let's first get the short call strike, and then find out the difference from absolute value of the ATM to the call strike, and the same distance should be subtracted from the ATM to get the put strike. So using this smart way, we did got what is my short call and short put. Similar examples I've written here, and we did got our long calls and long puts. So you can say that we got our long call strike and we did got our long put strike. Okay. Next would be that, okay, now we got what are my four legs are there. We have to go and get the token IDs for those four things. Okay, so these are the functions which gonna get what is the token ID for the short call contract, long call contract, short put contract, and a long put contract using the same function which was defined at the top, that get instrument or token underscore FNO. So using this, it's able to identify that what is your call strike, short call and a long call, and then short put and the long put. Okay. So now we got four tokens here. Now we have to utilize those four tokens to place the order. Okay. But before that, we have to get the LTP price of those. Okay. So what we're going to say, we're going to use a function called client code, which is provided by the portal client code, and we're going to get the values of those four functions. Okay. So once we're going to write again, we're going to use a client code, and we say this is my first token, this is my second token, this is my third token, that's my fourth token, and we are using here a f string. Okay, so that means in a single command we're going to get all the four values. Okay, and then we're going to use a JSON function, and we're going to find out what is the LTP of all the fours. because once you say quote, it's going to give you a lot of things. It's not going to give you only entity. It's going to give you what is the bidder price, what is the last trade price, what is open interest. A lot of other details are there. We are not interested in those details. We just need the LTV price of all those four legs. Okay. So in that case, we did got these four legs. And then what will be the spread price? So spread price means what a short minus long and short minus long. So if we're going to say short call, or you may in smartly you can say short call plus a short put. I mean this is total credit for the shorting position and total debit for the long position, insurance position. That will give me the spread. It means this is a maximum credit you're going to receive from your RN counter. Okay, then it's going to publish on your screen saying that these are the my four legs are there, four positions are there. Are you happy to take the trade? So it's going to show you on the screen that this is a possible trade. Are you want to go for the real trade or the paper trade? So for example, in the complete algo, we don't write this code. We're going to say just move on to over here. But just to give you the example here, I've written condition that pause for a moment and show on the screen that you want to take the real trade or the paper trade. If you say the real trade, there's going to just place the orders, and if you say the paper trade, it's going to say a simulation. You're going to take a trade and it's going to show the result, but it won't be a real trade in your account. Okay. And then once we take the trade, we have to record these details that when did we took the trade, what was that price, initial price, what was your total credit received. So we're going to store all this. So this is recording being done that we have recorded all the details. And then we're going to say that, okay, you took this trade for this particular trade based on your credit received. This will be your stop losses and this will be your target for this RN condo trade. Okay, and it's going to check whether you set a real trade or paper trade. If you have set the real trade, it's going to place order, or otherwise it's going to come out of this condition and it will continue below. Next up, your monitoring. So here we're going to do the monitoring. So we're going to say now if my trade is trade initiative is true now, because we have now took the trade and we have changed our parameter to true indirectly. Okay, so as we have said here that make it a parameter as a true. So it's assuming that your parameters are true. It means you are in the trade. It's going to do the monitoring of your trade. So this is a typical function where we're going to say continuously go and fetch the price of those four instruments and show me the profit and loss of that status. And if there are some conditions, for example, here that if market goes above your stop price, then say your trade hit the stop loss. If market hits your target price, then say your target is hit. And if market is more than 3:15, whatever time you define, is going to exit and then is going to close your trade, guys. I hope this is not too jargon. Let me quickly run this. So first of all, are there any questions on this course? Guys, anyone? Any questions? I hope this is not too much of jargon, guys. This is very simple strategy which I'm trying to show. Otherwise, if you say our real course, those are too complex because here I'm just showing very simple mini version of the real account. Okay. Otherwise, if you go the way we do run like 9 to 10 different strategies. So we have to run a complete kind of a train with so many bogies. Okay, yeah, this is a train with a single bogie. Okay. Okay, so if there are no questions, I can move on. Okay, and we're gonna run this code. Let me quickly run this code and let's see the result. Okay, so I think last time we did a run over here. This is done. This is also done. Very good. And let's go and run this one. Okay, so I'm gonna run this one. And there you go. So, and I'm going to run this one, and it's going to prompt me that do you want to take the real trade or the paper trade. So it's going to take some time because it's going to fetch all the details here. And as you can see, it has shown me that hey Santosh, if you want to take the trade, this will be your call strike, put strike. This will be your insurance. This will be insurance, and this will be the total credit you're going to receive. You want to take the real trade. As of now, I'm going to say paper trade, and we're going to just see whether it try to simulate. So we said a paper trade. So every 5 seconds, we did mention that every 5 second update. So as you can see here, it did took a paper trade and it's showing you're going to receive only 100 some order 955 points are there. This will be your stop loss 25% above, and this will be a possible target. So every 5 seconds, as you can say, is show you here, every 5 seconds is gonna show you the results. Okay. Yeah, so as you can see, it's showing you every 5 seconds. So it's every 5 seconds. So here we have seen that it's took a paper trade, and every 5 seconds it's updating you that this is your trade status. You can see that current MTM is 9.75. So initially when we took it was 9.55. It went against us by around 20 paisa, as you can see. Now it went against us because market may be going maybe up or down. Okay, most likely you can see a red candle or a let me go to Nifty, and you can see there would be a kind of a green candle. Okay, it's not a sideways. It's going. So we took a trade somewhere over here. It's trying to go up, and that's the reason showing me that MTM is against you, as you can see here. So we our initial trade was 9.55, and it is now 10.50. Okay, that way we took the real a paper trade here, and but with the real scenario, and is trying to monitor. So it's gonna come out of this trade if certain conditions are met. For example, if my this MTM now is going slightly in profit, okay, slightly at the break, near to the break even, and it is showing me that if my price goes against me and the market reaches more than 111 rupees 95 paisa, it's gonna move the losses. And if my credit receive goes in my favor and comes down to near 2.39, it's gonna book the profit here. Okay. Okay, this is a trade which I want to show. Now, maybe let me stop this and let me get out of this trade. Okay, so we're gonna say time exit. So we're gonna play some numbers here. So what I'm gonna do here, I'm gonna pause, interrupt this function, and as you can see here, we said that because I cannot change the exit, profit in my favor or stop loss went up forcefully. So what I'm going to do here, I'm going to change this time. Okay, here I said instead at 319 come out of the this trade be whatever be the result instead of say 319. What I'm going to do, I'm going to make it 13, and as of now the time is 10. I'm going to make it maybe quickly. I don't know. Maybe let me make it safely at 311. Come out of this trade. Okay. So what I'm going to do here, I'm going to pause this function. So I'm going to say interrupt here. It means I've stopped this as of now. And I'm going to run this command here once again. So now next time it's going to assume that I'm already in the trade, but it's going to come out at 311. Okay. So let me run once again and see what happens here. So guys, we are already in the trade. I just forcefully close my process, and I'm going to resume my process. Okay. So let me resume the process and let's see the result, what happens here. Okay. So I'm going to run this once again, our function. What do you think? Should I take a new trade or continue the old trade, guys? What do you think? It should continue old trades. That's the reason it didn't ask you that. Uh, it won't take the new trade, but it's going to continue the same trade here. Okay. Okay. No. So here, for the moment, is the new trade, that is 11 trade and 10.6. So let's wait for 311 and a few seconds to move. And in that case, yeah, because I did run the first command here, so it initialized the new command. Otherwise, it would have run directly from here. It would have taken the new, the old trade continued. Okay, because I have said our trade function is false, so it means assume that you are no more into the trade. And let me do one thing for the next time when we take the paper trade. I want to I'm going to write this function over here. Okay, not over there. Maybe over here. Okay. So let's see what happens here. Another few seconds to go, and you can see that it successfully took the trade and is trying to monitor the trade at around next one 311. As you can see, 311. It closed the trade. Can you see that here, guys? So it assumes that now your exit time is has reached. Let's come out of this trade. So now what I'm going to do, I'm going to place this real trade in the real account, and then you can see what the trade goes, and it does monitor. It does monitor and come out of that. So what I'm going to do here, I'm going to change this timing. Otherwise, it's gonna forcefully it's not gonna take the trade here. So I'm gonna say maybe it's 320 as of now. And let me write maybe let me put the hash over there, and I'm gonna write 320. Maybe 315 would be my time to get out of this new trade. Okay. And what I'm gonna show in my real account, and we're gonna say whether it's able to take the real trade here. Okay. So let me see the orders here so that you guys can see. Let me, I hope it's able to log in. Oh, I have to log in once again. Log in, guys. Okay, so let me see whether it got logged out. Okay, could be possible that it was idle for few hours. Okay, let me see. Otherwise, we will just run it. We're gonna see the from the algo directly. Okay. So there is some issue here. Okay, now it's showing us here. Okay, it's showing us here. So let's keep a watch over here, and then what we're gonna do? Uh, wait for a moment. Okay, good trade book. I was doing some testing here in the morning. Okay. So, okay, let me quickly go and go to the orders here. Okay. Functional here. Let's go to orders and we're going to run and we're going to see whether we do get some kind of alert and the trades are being placed here. Okay. So what I'm going to do, I'm going to run this code here in a small window and we're going to see whether we do get the trade there. Okay. So this is a real account and we're going to take a sample trade here. Okay. And you might see some alerts that it took the new trade here. Okay. What I'm going to do, I'm going to run the same function once again, and you can see the prices. This was the earlier price. Okay, so earlier my average price was 0.45. I did maybe 11 o'clock. I did some testing here. So just remember this price is going to change here. Okay, and let me run the command and let's see the results here. Okay, so that's there you go over here. What I did. Okay, I think I have. Okay, so let me clean everything. Let me run once again so that everything is clean here. I don't want to mess up with the real account. Okay, awesome. Okay, so we're gonna run and we're gonna see whether we get the orders here. So I'm gonna run the from the scratch. Okay, so that's my first function. That's the second function. Okay, and there you got the file, and that's my third definition. Then you're gonna define log into my booking account. We logged into my booking account, showing me encrypted my session token, showing me my portfolio, showing my margin things here, then showing me the weekly series here, monthly series. Now we have the we're trying to get the sample contact details, sample future contact details, and then now we're gonna say give me the sample prices. They're going to show me the sample price. Now we're gonna make trade parameters here and we have defined what is my trade exit. That's to change. Now it's already 315. I'm going to make it 320. So at 320, it should come out of this trade, or maybe let's make it 318. That way easy. And then what I'm going to do here, I'm going to run this function. It's going to ask me, do you want to take the paper trade or the real trade? Okay, so let's wait here. I'm going to say real trade, and you can see the alert on my screen. I'm going to press enter and hopefully you're going to see some alert. Can you see the alert here, guys? That's my first trade, that's my second trade, that's the third trade, and that's the fourth trade, as you can see here. So 4 orders were successfully placed here. You did remember that it was 045 and 715. I'm going to refresh this page once again, and you're going to see that the prices would differ from here. Okay, so these are the 4 prices that are the latest trade. We just took it. Earlier was 0.45 and 0.7.4 or 15. These are the 4 questions. It just took it here. Okay, so this is just so real. I mean, a real order went here, and you can see that it's a functional here. Let's see what is the result as of now, and you can see that it's monitoring here, and you're gonna see you can see that it took the trade and it's trying to see the MTM. Okay, so it's saying that your initial trade was at you got to receive a trade of 9.3 and your stop loss for the trade is 11.62 and your target for this trade is 2.33 or your target could be 318. So let's wait for another 1.5 minutes and you can see that it's going to place the trade to come out of this position. Okay, so this is a simple example here, guys. So using this same methodology, you can go, you can make your own strategy. What are strategies are there? For example, on fly, maybe some kind of calendar spreads, or maybe some kind of directional bet, a bull cost spread, backward spread, those kind of stuff, and you can just do the trading here. Okay, let's wait for another minute or so, and we can see that it's going to place an order to close this positions. Okay, another few seconds to go, and you're going to see the result. Okay. And remember, this is a simple strategy. And if you're running a complete kind of algo system, then you need to have a lot of multiple strategy should be there, multiple exits, entries should be there. Okay, you might have some kind of adjustments for the trade, like roll ups, roll downs. Okay, those kind of things would be there. This is a simple approach, but using the same approach, you can even do the roll ups, roll downs, monitoring that can be done easily. Okay, so another a few seconds to go, and you're going to see that it's going to say that. Uh, it's out of this trade in next maybe 10 or 15 seconds. Okay, let's see here. Still monitoring the trade, and that's 11:7. 13:17. Still we on the trade, and you should be able to see any time that orders are placed here to come out of this trade. Okay, and you can see that it says that we are good. We are close here. And let's quickly see the numbers here. Okay, I'm going to refresh this, and you can see that it's showing me that first order being placed here, second order, third order, and the fourth order. Okay, so we can see all the orders are being successfully placed here. Okay, and let's quickly see. So see the numbers here, guys. 620 and 015. I'm going to refresh once here, and I'm going to see here, and you can see that we did got another next set of the orders here. So it was a 015 and 620, and we got another four orders. This is a kind of algo system where we are trying to show you the real kind of trade, real flavors, where it's not only the entry, but it is a kind of monitoring your trade and profit booking your trade or loss booking your trade or maybe time exit your trade. Okay, and if you want to see what was the trade we took, it's going to show all the informations here, and it's going to show me that this was your trade details. You took the trade, and because of time exit, you are out of this trade. This was the future instrument name, and this was the shortcut. This was the strikes for the trades. Okay, this were the token IDs for those trade, and you took this trade as a real trade. And this was your entry at 311, 1150 was your trade, and this was your entry price. This was your initial stop loss. This was initial target, and you did came out of this trade because of the time exit. This is your time parameters, and while exiting, this was the price. Okay, so that is what is being shown here, and then you can, if you want, you can do a lot of other things like adjustments, roll up, roll down, those kind of stuffs can be added here. Okay, that is what I want to show today. I have done that, and that is what once you make your trade, you have to just sit, relax, and let your system run. Okay, so these are the things, and maybe if if there are questions, do let me know. Otherwise, I can jump on the next slide. A slippage, for the slippage, you can write your bid and ask price. You can say, I want to trade only not on the ATP price. You can say, I want to trade with the bid and ask price, or maybe a first bid price, or maybe a second bid price, second ask price, those kind of things. So you can fetch the code and you can write that. Yeah. Yeah. So that is what your slippage. Are there any other questions, guys? Yeah. Okay. Next, let me quickly go on the last slide. If there are no questions, I've already overshot my time. Okay. So next would be once you take your if you're building your algo, a complete algo system. Okay. So make sure don't rely on a single strategy. That would be kind of a knockout match in the semi-final. Okay. So don't rely on the single strategy. You should have a set of a strategy. For example, like in our case, in our Sonic Alpha, okay, we do have a set of maybe around 9 to 10 different strategies are over here. So it's not we're not relying on a single strategy. It is a set of the strategies that what we say. Here we do have a set of strategies where it could be a dashing bet, it could be a non-dashing bet. So you don't have to go on a single strategy ever. Okay, it should be a mix of multiple strategies. So you should have a strategy for credit, debit, positional, intradays, okay, BTST, STBT, that makes a complete family. Okay, so don't go on a single strategy. That will be at the same time, if you're building the strategy, make sure that those strategies are somewhat non-correlated. Okay, so if one is a bullish strategy, then other should be a kind of sideways kind of a strategy should be there. Some kind of those things were there. So you have to run your correlation test, and you also see whether your first strategy is how much correlated with the second strategy. If it's like 90%, 98, 75%, 80% correlated, it means you are in the same boat. Okay, that's not the right thing. Next, if you're trading, you have to make sure that, in fact, there was some question from some guy over here. So you have to trade in the instrument which has enough liquidity. At the same time, the strikes which has enough liquidity. For example, Like if we trade Nifty, then normally I try to avoid a 50 as much as possible. I normally prefer to trade the 100 strikes. Okay, you have to identify every instrument would have some kind of those kind of features would be there. Few strikes may be highly liquid and few strikes may not be. For example, like in case of TCS and Reliance and those kind of things, you can see whether 10 rupees strike may be liquid or maybe 20 rupees strike could be a liquid or maybe 100 rupees strike would be a liquid and other strikes may not be liquid enough. Okay. Next, avoid overfitting. Okay. So what happens here? This is the learnings. Okay, that you're gonna get it here. A lot of time, what happens? We make our strategy and we try to optimize as much possible. Okay. So let's take example. Hey, 920 strategy looks good. No, I think 921 looks very good. 921 in 15 seconds is much better. I want to take the entry. That's my Shubh Muhurat time. Okay, so that's not the right way. Okay, so here what you have to do, you have to run your strategy in multiple scenarios. For example, if your strategy runs well at 920, try to run a few time here and there. For example, let's take the example like I have a strategy which is based on a moving average. Okay, and it says whenever there is a crossover of 8 by 89 moving average, I'm going to take the strategy. Okay, that may be a kind of a over optimized. So what if you to see whether the strategy, I mean, strategy is really powerful strategy, you have to change the parameters. So instead of 889, you can say I want to run at 890, okay, 896, 800. At the same time, you have to change. Maybe instead of 889, let me make it a 589. Let me make it a 789. Okay, so you have to make those parameters quick. And so, for example, like whenever we do the workshop, we normally say, oh, a lot of guys will ask me, Santosh, what is overfitting? So we say you have to make a strategy in a such a way that so it should run in all the roads. For example, if I'm making a bike, okay, it should not happen that that bike should run smoothly on only highways. Okay, गाँव में भी चलने चाहिए. It should run on my village roads also. It should run on my mid towns also, normal towns also. It should run smoothly on the highways also. Okay, so same way when you're making your strategy, you have to make sure that that strategy runs. Although it may be optimized for a 1 o'clock strategy, okay, but you have to make sure that that strategy, if it runs at 12:30, it should give you the similar results. It may not be the good result, but it should not give you the higher drawdowns. Okay, same way at 11, 1, maybe 1:15, 1:30. We should give you the similar results, and there should not be a big surprises on those time intervals. Okay, that is called overfitting. Next is perform a backtesting. Okay. So sometimes a lot of things may look good on the theory. Okay. But you have to go really and to see the backtesting. For example, here we did a backtesting and make sure that you are not doing a backtesting for just 1 year. That may be lucrative because in fact, I've seen a lot of marketplaces where guys have shown the results for just 1 year, okay, or maybe last 2 years. That is not a good time frame, guys. In the last 2 years, market was in a high volatile. A lot of momentums were there. So if you are making your own system, make sure that you run at least 4 years, 5 years, kind of possible. Like here, if you see, we do have a kind of a strategy where we did a complete 5 year testing. It means then we have captured as much as possible information. In fact, we would have loved to go prior to August 2016, but unfortunately there was no Bank Nifty weekly series were there. Okay, so we started from the first day of the weekly Bank Nifty, and we did testing for complete 5 years. So don't just do a testing for last 1 year or 2 years. That may not give you the right picture, especially in the last 1 2 years where market was in kind of a lot of trendings were there, either strongly upside or strongly downside. So a lot of your momentum strategies may show you kind of result that may look a really a good result, but it may not be the real scenarios. Okay, so you have to do your back testing before you perform your trade, and then you have to do a forward testing. So forward testing means you can take for a quarter or so you can do a paper trading. That could be a forward testing, or maybe with a smaller position sizing. Or do the real trading. So what happens here? Back testing something may look very rosy, but once you take the real trade, you're gonna see that there are a lot of slippage out there. Maybe there are some issues with your broking platform or brokers and those, or maybe some kind of execution bugs are there. Those issues are there that may cost you money. Okay, so you have to make sure that whatever being shown in the back testing is being actually you're gonna get in the forward testing. For example, like in kind of this Aryan strategy. Okay, so although we have published here back testing here, as you can see here, okay, we do publish results on real market hours. I mean, so this was the all back testing, but then we do test the real trades here. So this is for the arm janta where we are publishing that this is our real trades, okay? But this is actually real trade, but at the same time, every week we again run the back testing and we see that whatever being shown here is the same thing we would have gone in the real as well as the back testing. Are there any kind of slippage out there? For example, here last week we got around yeah, assume 2% returns are there. So we're gonna see whether we got the same 2% result here also. Okay. Excuse me. Once backtesting is done, it means not it's not end of the life. Okay, you have to do it every a week or maybe every month. You keep on doing your backtesting and compare with the real trades. Okay, so you're gonna get the scenarios whether your backtesting is still valid along with the real trade. So you're gonna get if there are some big gaps out there. Okay, and then exceptions in the backtesting results that you have to make sure. Okay, for example, sometimes trades may look very lucrative. A lot of marketplace guys they have shown a really good trade, but thing is what happens. Trade may look good. For example, here if you see the this one, it may look so. Guys, what is the here exceptions? Can you see? Either all the results is very good, but there is one exception here. Can you see? Can you identify which year on the screen? Okay, this is a backtesting for last 5 years. Okay, but we would prefer to ignore 200 2017 because the results were showing us 133%. Okay, a lot of guys would actually go and take a bet based on this. Okay, but for me this is an exception because we never got that kind of result in every year. Our average is around 60 to 70% over year. Okay, but not 133%. So if you get some kind of exception results for a year, particular year, that may look good. It may give a kind of a psychological thing that yeah this strategy is too awesome, okay, but this is not the real good result. You have to find out what is the normalized result here. Maybe this year the service even only that every year it is showing around 60 to 65 could be kind of realistic results that you have to assume you have to go. So any strategy which is showing this kind of uh, which is for a year it goes up. For example, here this was a sharp movement over here. Okay, this is I'm not happy with that. I need a smooth curve over here. That would be a really good trade rather than this kind of a sharp curves. Okay, so a lot of the strategies we have seen on the internet, which looks good because in a span of maybe 2 years, 3 years, or maybe 2 months or 3 months, it just went up and then smoothly that way and that way. So that is not the real strategy. You have to find out a strategy which is smooth from the start until the end, and there is no kind of a big moment in between. Okay, or sharp down in between. So that are a few lessons that we have learned, and those are the optimized parameter we do. And before I wind up, a few things that remember this was a simple example just to introduce you guys to the algo trading, where we try to show you that how to define the strategy, what are the parameters you have to use, take the real trade, monitor the trade, exit the trade. Okay, it may be a very much complex once you start. Okay, later on because later on now you're I've shown you single strategy, but you have to run with a set of another 4 or 5 different strategies are there. Okay, I think, for example, here, like I've shown you that we took the trade and then there's your system crashes. So once you reboot your system, we should be able to resume. That can be, if you guys want, if there's a time, I can even show you that we will crash our system and then we will resume. You should be able to resume your trade. So those are the other parameters you have to think before you go and take the real trade. Okay, and then do verify that in your trade everything is well defined. There is no something more or less kind of things. So there should be some upper limits, lower limit control should be there in all the commands. Okay, so that there is we should not go to some kind of fat finger punching trading. Okay, and then here I've shown you with the product securities. Okay, but the similar approach you can do with any other brokers. Okay, most of the brokers do provide a similar APIs with the or maybe REST functions that can be used and to take your trades. We have done this with other brokers too, but for us, we do a trading with the product, so that's most comfortable to show you with the product. But I have done testing with the brokers also, including like earlier version of option vehicle was there that was able to take a place the orders to some other brokers. Although we never make it public, but yeah, we can do. So here also we use something like a REST API at the backend, and we did place the orders. With that, I would love to close the session because I overshoot by almost 30 minutes. I hope Quants League team won't bother about that. And maybe another 1 or 2 minutes, some quick questions, and then we can close that. Sorry, conflict team. I overshoot by half an hour. Okay. Let me see. Are there any questions? Yeah, which broker? See, you can use. There's a question that which broker here I've shown you with the quote. It can work with any broker. Similar course. Okay, we have seen course for the multiple brokers. Most of the brokers are fine are using the similar approach. Okay. What is the best way to deal with the slippage? I've already answered that. Okay, guys. That means you can use a price based on the bid and ask price. You can place the orders.